Then we see billionaire asset manager Ray Dalio has argued that investors should allocate at least 15% of their portfolios to gold and Bitcoin as a hedge against macroeconomic risk. The veteran asset manager, that's Ray Dalio, has advised investors to, put that money there as a hedge, at this point. But we know how volatile Bitcoin can be, and gold hitting a new high at this point. But is that going to work? We'll definitely find out. Let's talk to Gilbert Rapata now, team lead, Smart Investor Lodge, joining me via Zoom. Great to have you, Gilbert.
Yeah, it's my pleasure, Mr. Ladi. Great
Right.
to be here.
So definitely, we like to take advice, from investors who've made it at this point. And we're hearing Ray Dalio there saying, allocate at least 15% in gold and Bitcoin. But I'm sure that's scary to some people.
Okay, so Ray Dalio has been increasingly vocal about the diminishing trust in fiat currencies, due to excessive money printing and also geopolitical instability. But then he has been having more like an evolving stance, alongside his long-standing support for gold. So he has an evolving stance for Bitcoin, and I think that this his stance for Bitcoin and gold is more like a reflection in his belief in diversification and also hedging against monetary debasement. But then it will bring you to the question, why Bitcoin or gold? Gold has proven to be a long-term inflation hedge for centuries. Then Bitcoin, due to its digital scarcity of just 21 million, and also proving to be a long-term store of value. So Ray Dalio is known for this word we always use, in the financial market, cash is trash, which he says is the worst investment, over time. Then for me, I think that Ray Dalio's 15% allocation is more like a reflection of a realistic approach in an uncertain monetary era.
But Gilbert, I'm wondering, yeah,
investment.
Gilbert, I'm wondering, because both asset classes, they're at all-time highs right now. Bitcoin is close to, the high of about over $120,000. Gold, that's touched 3,004, 3,5. So they're both near highs. So it just seems scary, allocating at this time. Or should we wait for a pullback?
Okay, so first of all, if you have held gold or Bitcoin in your investment portfolio for the past 10 years, you would have outperformed the great Warren Buffett. So there are two approaches in the market. First of all, when you're looking at a store of value, what you're always looking at is what you're buying over a longer period of time. Will it be able to have more value? And then that is where you start looking, has gold been able to prove that it is such an asset, or even Bitcoin? We know Michael Saylor keeps buying the top of Bitcoin, but is he a profitable investor? Yes. But then Warren Buffett is someone who likes sitting in cash and also wait for drawdown and also bear market. So it's just your approach to the market. If you're looking for something, you just want to dollar cost average, and you know that over a long period of time is going to increase in value, these two assets will do the work. And then if you have more like a value investor approach to the market, where you want to sit on cash and buy at a price which is suitable for a value investor, then it's up to that investor to make such decision. But then I still think that gold and Bitcoin is still my view, will still continually outperform stock pickers.
Right. I guess it's a digital gold and gold at this point. But we have Max 7 companies reporting this week, Amazon, Meta, and others. Any impact to Bitcoin?
Well, I think that while any reports are coming in, what will be more important is tomorrow's FOMC decision, because the market is holding its breath, based on that. And yes, I know that any report at the end of the day will still have some kind of impact, but I think that right now we don't have retail FOMO in the cryptocurrency market yet. And that is why you still see stocks are also, surging, but we are not having that kind of surge in the cryptocurrency market yet, because we don't have retail FOMO yet. But then tomorrow's FOMC decision is where I think everybody should be putting his attention, because that's where the impact is going to come from.
All right. Thanks so much, Gilbert, there for breaking it down for us. All eyes on the FOMC.
Yeah, thanks for having me.